The year 2020 unleashed a series of economic uncertainties that reverberated across the globe. From pandemic-driven disruptions to geopolitical tensions, the financial markets experienced volatility like seldom before. Amidst this chaos, one asset consistently emerged as a beacon of stability: gold. Historically known as the crisis commodity, gold has always been turned to during times of uncertainty. Its intrinsic value is not only recognized universally but also appreciated when traditional investments falter. This introductory glance sets the stage for understanding why gold remains the ultimate hedge against economic turmoil. As we delve deeper, we will explore how gold has stood the test of time, safeguarding wealth through centuries of economic upheavals. The following sections will paint a broader picture of gold's undeniable importance in an investor's portfolio, especially during periods marked by unpredictability and fear. Throughout history, gold has played a pivotal role in economies around the world as a trusted reserve asset. Ancient civilizations valued gold for its rarity and beauty, which later translated into its use as a form of currency and a store of value. This historical backdrop highlights gold's deep-rooted status as a safe haven. During the Great Depression in the 1930s, for instance, gold was one of the few assets that retained value as the global economy crumbled. Governments hoarded gold to stabilize their economies and reassure their citizens. This pattern of turning to gold in dire times has been replicated in various economic crises over the decades. Even in the modern era, central banks maintain substantial reserves of gold, underscoring its continued relevance and trustworthiness. These reserves serve as a safety net, reinforcing the financial stability of nations against potential economic downturns or currency devaluations. The financial crisis of 2008 is a prime example of gold's resilience. As stock markets crashed and real estate values plummeted, gold prices surged from around $800 per ounce at the start of 2008 to over $1,000 by the end of the year. This increase contrasted sharply with the severe losses in other sectors, illustrating gold's role as a protective asset. More recently, during the COVID-19 pandemic, gold again proved its mettle. As uncertainty over the global economy grew and stock markets became jittery, investors flocked to gold. The price of gold reached new heights, peaking at over $2,000 per ounce in August 2020, offering investors a safe haven during unprecedented times. This pattern is not just a coincidence, but a testament to gold's enduring appeal during periods of financial distress. Its ability to perform well when other investments are faltering makes it a preferred choice for those looking to preserve capital in turbulent times. Investing in gold is not just about seeking refuge during economic storms, it is also a viable long-term investment strategy. Gold's value tends to rise in response to events that cause the value of paper investments like stocks and bonds to decline. Therefore, it can serve as an excellent portfolio diversifier. Considering the cyclical nature of economies, where periods of boom are inevitably followed by bust, having gold in one's investment portfolio can provide a buffer against these fluctuations. It is not subject to the same risks as other investments which are tied to specific economic conditions or performances of particular industries. For long-term investors, the appeal of gold lies in its historical performance, which has shown a steady appreciation in value over time. Even beyond its crisis-related surges, gold has maintained a steady upward trajectory over the decades, underscoring its role as a reliable investment. Gold's allure as a hedge against uncertainty is not just historical lore, but a practical financial strategy observed across centuries. As we have explored, its performance during recent economic downturns further cements its reputation as a safe haven during turbulent times. For investors seeking stability and protection against economic volatility, gold offers a compelling option. Its ability to withstand economic shocks and maintain value over time provides a sense of security that is rarely matched by other financial assets. In conclusion, whether as a part of a diversified investment strategy or as a standalone safeguard, gold continues to stand out as a reliable asset. Its timeless value and resilience make it an indispensable component of any prudent investment portfolio, especially in an era marked by unforeseen economic challenges.